Hello friends, this is Swapnil and we are continuing our banking series with the video where we are going to know everything about checks. Sorry for the voice guys, it's little different because I am suffering from cold. So what is meant by check? Along with the dynamic banking trends, there form an evolution in the way money is transformed from person to person. This evolution of documentation is termed as a check. Check is an instrument with unconditional order addressed to the banker. It is signed by a person who has deposited cash in a bank. A check can be issued for a current account or the saving account and can be used to deposit or pay money to other people through the bank account. Every check is unique and contains a unique check number, marker and IFSC code. Now let's explain about the check number and the number which is present on the check. The check number is generally used to track the status of a check, and the bank number which is present on the check is a unique number that assists in identifying a check. Now let's explain all the digits of a marker code, that is magnetic link character recognition code. The 9 digit of a marker code indicates the bank and the branch from where the check was initially issued to the account holder. The first 3 digit of it are the city code. The next 3 digit will reflect the bank code and the last 3 represent the code of a branch. After the marker code, there are 6 digits that are mentioned on a check and they are the portion of account number. The last 2 digits at the bottom of the leaf are the transaction ID. It assists in knowing if the check is issued is a local or payable. Most of the checks are payable at par with the core banking system at all the banks. All the numbers that are mentioned above are written with the magnetic ink and could only be read with the magnetic ink reader. All of the banks would mostly have the same format of the check with not a lot of variation at all. Now we look towards the parties of a check on the basis of handling. There are total 5 parties involved in the check. That includes drawer, drawee, payee, endorser and endorsee. Now let's describe all of these one by one. First is drawer. This is a person who signs and issue a bank to pay the respective amount of money from his account to the person who can draw the check. In other words, the account holder of a check. Now second is drawee. This is a particular bank from which the check needs to be drawn. Third is payee. This is a person who receives the payment from the holder of a check through the bank. Next is endorser. This is when the right of payment is transferred from the payee to another party, and then the payee is called an endorser. Last is endorsee. This is when the right to take the payment is transferred from the payee to another party, and the party to whom the right is transferred is called the endorsee. There are several types of check that can be categorized on the basis of their usability. Now let's see all the categories one by one. First is bearer check. A bearer check is a type of a check in which the holder of a check has the right to receive the payment. The person who presents the check to the bank for payment will receive the funds, regardless of who the check is made out. Bearer check are considered to be less secure than other type of checks because they can easily be lost or stolen and cashed by anyone who has possession of them. Bearer checks are now phased out in many countries and are not in common use. They are only used in some cases for the movement of funds between the banks. Second is order check. An order check is a type of check in which the payment is made to a specific person or entity. The person or entity name on the check is also known as a payee. Is the only one who has the right to receive the payment. Payee must endorse the check by signing it before it can be cashed or deposited. Order checks are more secure than bearer checks because they can only be cashed by the payee. and it is difficult for fraudsters to cash someone else's check. Order checks are commonly used for personal, business, and other financial transactions. They are considered as a standard type of checks in most countries. Third type is a cross check. Cross check is a type of check that has been marked with two parallel lines, usually across the top left corner of the check. This marking indicates that check can only be deposited into a bank account and cannot be cashed. A cross check is considered to be more secure than an open check because it can only be deposited into account of a payee, and it is more difficult for fraudsters to cash someone else's check. Crosses of check are also useful when the check is lost or stolen, as it only be deposited in payee's account. In some countries, banks may allow depositing of checks in other banks with the same clearing network. Fourth type is an open check. An open check is a type of check that can be cashed or deposited by anyone who has a possession of it. Unlike cross checks, open checks do not have any special marking and do not indicate the account to which the funds should be credited. Open checks are considered to be less secure than cross check, as they can easily be lost or stolen and cashed by someone other than the intended recipient. They are also more susceptible to fraud. Open checks are less common in use, and most of the time banks discourage using them. They are mostly used for transactions between known parties where there is a trust between them. Next type is post-dated check. A post-dated check is a check that is written for a future date. Check can be deposited or cashed only on or after the date written on the check. This type of check is commonly used when the payer wants to ensure that the fund will be available on a specific date, such as a rent payment or a loan repayment. It is also used when the payer wants to make a payment on a future date but wants to issue the check now. The payee should not deposit the check before the date written on the check. Post-dated checks are considered to be less secure than other types of check because they can lost or stolen and cashed before the due date. Next type is a stale check. A stale check is a check that has been written for a long time and has not been deposited or cashed. The check is considered stale after the certain period of time, usually between 3 to 6 months, depending on the country or the bank's policy. A stale check is not valid for payment and the bank will not honor it. In other countries, the banks will return the checks to the payee as a stale check or expired check with the reason. It is the responsibility of the payee to ensure that the check is deposited or cashed within the validity of a period. It is also recommended that the payee should not rely on a stale check as a form of payment, as the funds may not be available. The next type is a traveler's check. Traveler's checks are the form of pre-printed negotiable checks that can be used for travel expenses. They are issued by banks and financial institutions and can be replaced if stolen or lost. Traveler's checks are the popular form of payment for travelers because they offer a level of security and convenience. Next type is a banker check. A banker check, also known as a cashier check, is a type of check that is guaranteed by the issuing bank. It is considered as good as a cash and can be used for large transactions or when the payee requires a guaranteed form of payment. Bank issues the check and deducts the amount from the account of a person who requested it. The check is then made payable to a specific payee because the bank guarantees the funds. The check is considered to be a very secure and is often used for transactions such as real estate purchases or car sales. Bankers' checks are considered to be safer than a personal checks and are less susceptible to fraud. Next is a blank check. If a check has been signed with no written amount or payee's name, it is called as a blank check. The payee can fill in their name and payable amount in the blank space. A blank check is used only when the drawer trusts the payee to fill it out properly. Blank checks can be risky as they can easily be manipulated or misused by others. As a result, they cannot accepted by all the financial institutions and banks. Next is a self-check. When a check is not issued by an organization or business but by an individual, it is referred to as a self-check. Typically, they are issued by individuals who wants to withdraw funds from their accounts. They must be handled with care so they are not stolen or lost. If they are misplaced, anyone else can attempt unsanctioned funds withdrawals mentioned in the check. Hence, self-check needs close monitoring to prevent any fraudulent activity. So, this is all about different types of checks. Now, let's discuss the advantages and disadvantages of a check. Checks are more convenient to carry as compared to cash. Cross checks is more safer than other because the money will be directly deposited into the account of check holder. Checks can be post dated, so it is helpful in future payments also. Checks can be traced if lost with the help of transaction ID. Now let's see the disadvantages. Checks are not the legal tender like a cash, so the other creditors may refuse to accept them. Checks may be valueless if the drawer has no funds in his or her account. In this case, checks generally bounces. Checks are not suitable for depositing and withdrawal of small amounts. So, in this way, I have tried to clarify everything about checks. If you like my work, then put a like button and subscribe the channel for more informative videos.